All right, if you love dividends, this is a stock to watch out for. Now, this stock back in December 2018, when the market corrected itself, it dropped all the way down to 350. Actually, even lower, 327, as you can see here. Now, I actually made a video about this before it reached 327. I think I made a video when it was trading at 350. I was actually thinking of selling all my positions, even the losing positions, and just put everything in this stock when it was trading at 350. I was very confident that it was going to come back to its normal price, which is usually around $10. Now, it didn't go all the way up to $10, but it did go all the way up to almost $8, $8.60. It went all the way up to $8.60. If I had bought this stock at 350, I probably would have sold it at 7. So I would have doubled my investment in quite a short period. But not only that, this stock pays 12 cents per month, 12 cents per share per month in dividends. So if I bought the stock at 3.5 and right now I'm getting 12 cents per share, that's a yield of 3.6% per month, or per year, that's a 43% dividend yield if you had bought this stock at 3.5 or this mutual fund. Now, with the correction we had the last 2 weeks, the stock dropped to 620. It was trading in the 7s. And as you can see right now, if you buy the stock right now, the yield that you'd be getting is 2% per month or 24% per year. So 24% per year if you buy this mutual fund right now, because it pays 12 and a half cents per share per month in dividends. So what this stock is exactly, it's actually a mutual fund from the company called Quadravest. And what it is it invests in, if you look under fund features, the fund holds all these big names: Bank of Montreal, Bank of Nova Scotia, CIBC, National Bank. It's got some US banks as well: Bank of America, Citigroup, Goldman Sachs, JP Morgan. So as you can see, pretty safe, right? It holds all the big financial institutions. Obviously, so it obviously collects the dividends that these stocks provide, but at the same time, it sells covered calls against these positions. And that's how they're able to pay out their high distributions, because of the income that they're able to generate from their quality stocks by selling covered calls. So if you look at the distributions or distribution history, you can see that every month they pay 12 and a half cents. Now in December, they weren't able to pay it. So obviously in the month of the correction, they were not able to pay this distribution, because they mentioned that if ever the net asset value of this mutual fund drops below 15, they don't make the distribution. So right now their net asset value is at 15.66. So probably if the stock drops to 350, then for sure the assets under the fund dropped in value, of course. So now they won't be paying distributions. But as soon as this mutual fund comes back up, as soon as the general market comes back up, they'll start paying their distributions, and you would be getting a crazy yield. So if we look at the consistency of their dividends, if we look at, let's say, max here, so you could see, as far as this table brings me, you could see that they've been paying dividends since 2003. They haven't missed dividends that much. So since 2003, in the last 16 years, they probably missed a dividend payment maybe 2 years or less in the past 16 years. And if you look when they missed it between June 2011 and January 2013. So about a year and a half. And they also missed it between November 2008 and May 2009. So if you combine both these gaps, you could say that it's about 2 years combined out of the last 16 years. So it's pretty consistent. If you knowing how this mutual fund is able to pay dividends, it's pretty consistent, because as soon as it drops under 15, they don't pay it. So in the past 16 years, it only dropped under 15 for 2 years. So it's pretty consistent, but the idea is to get in at the right price. So even at this price, you'd be getting a 24% yield, but I personally would not buy right now. I would wait until it drop. If it drops to $3 again, like it did in December, then it becomes very interesting. Getting a 43% yield per year, plus some capital appreciation, because this mutual fund usually trades between $8 and $10. The only downside I see to this mutual fund is that it has a termination date, and it's usually every 5 years, and the next termination date is December 1st, 2020. So what usually happens though is that they keep extending. But if they decide, so they've had it for over 16 years. So if they decide that they don't want to extend for some reason, what's going to happen is whatever the net asset value is, $10 will go to preferred shareholders, and then the rest will go to Class A shareholders. So if you end up buying the Class A shares, the ones that pay the interesting dividends, the 12.5 cents per month, let's say they were to terminate the mutual fund right now, net asset value is 15.66. So $10 goes to preferred shareholders, $5.60 would go to Class A shareholders. And as you can see, the stock trades at 620. So if you do buy it at 620 and they decide to terminate it, you'd be getting $5.66 back. So you'd be getting less than what you paid for. But that's in case they terminate. So just to avoid this risk, it's best to buy the stock when it's low. Don't buy it when it's trading at 9 or 10. But it's definitely worth putting in your watch list and keeping an eye on it. Wait till it drops. I think if it drops again to $3, I'm going to sell everything and just buy it. And then when it goes back up, either I'll keep it and just collect 43% dividends per year, or I'll sell it, take my capital, and continue with my covered call strategy. They also have another mutual fund that does the same thing. It's called Dividend 15 Split Corp, DFN.TO. But this one is actually even safer because it's never missed a dividend distribution. So this one is the safest mutual fund they have. It's never missed a dividend distribution. It's got a termination date of December 1st, 2024. It's got a net asset value of 17.6. So as you can see, it's safer. This one also has the same rule. If it's below 15, if net asset value is below 15, they don't pay the distribution, but it never dropped below 15. And these are the core holdings of the mutual fund: BMO, Bank of Nova Scotia, Bell, CI Financial Corp, CIBC, Enbridge, Manulife. So all quality stocks: Sun Life, TELUS, Thomson Reuters, Toronto, TD. So really amazing quality stocks, and plus they sell covered calls against their holdings, of course. But of course, they don't sell at the money call options. They probably sell far out of the money because they have a lot of shares. Plus, they don't want to sell their shares. They want to keep the shares. So, and this one here is trading at 8.49 right now, and I think this one pays 10 cents a share per month. So what does that give you right now? It would give you a yield of 1% per month, so times 12, it would give you a yield of about 14% per year if you buy it at this price. It doesn't have much capital appreciation though. It always trades around $10. I mean, you could see here at some point it was trading at 19, but I don't think it's going to go back up to that. But most of the time it's trading around $10. So this mutual fund, if you buy it, it's not for capital appreciation. It'll be for the high dividend yield. Now this mutual fund is also very similar, pays monthly distributions, and I think it has the same strategy of buying quality stocks and selling covered calls against it. And as you can see, these are the top 25 stocks in its portfolio: Berkshire Hathaway, Coca-Cola, Microsoft, Unilever, Royal Bank, Johnson & Johnson. The inception date is August 7th, 1997. So this is another one that's interesting, but also there's not much capital appreciation in this right now. So it's definitely worth adding to your watch list, and wait until it drops. If it drops during a market correction, definitely something to pick up if you love dividends. I think right now it pays about, it pays 10 cents a share per month, but as you can see, it missed a few distributions recently. Yeah, so it actually started, it hasn't missed a distribution since inception, since 2001. Yeah, so since 2001, it hasn't missed a distribution, but all of a sudden right now in 2019, it missed a few distributions. So maybe just be careful with this one. But definitely DFN and FTN is very interesting. I'd definitely watch out for. And personally, If FTN drops to 350, I think I'm going to sell everything and just buy FTN. Wait till it goes back up and I'll decide whether keep it or sell it. All right, so this was the dividend stock to definitely add on your watch list. If you have any questions, any suggestions, leave them in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Also check out the other referral links below. Thanks for watching.